It's time for Talk Law Radio with Todd Marquardt. Todd Marquardt, attorney at law in Texas. If you're a millionaire or a thousandaire, Talk Law Radio is now on the air. Call in with your business law question, your elder law question, veteran aid, Medicaid, build a business to get paid. 210-308-8867. Or ask a question online at marquardtlawfirm.com. That's MARQUARDT lawfirm.com. And now it's Talk Law Radio with Todd Marquardt.
Welcome to Talk Law Radio. I'm Todd Marquardt. On the radio, on Facebook Live, on YouTube, on talklawradio.com. And today our hidden legal issue blind spot is, what is long-term care insurance and how can you use it to pay for home care? Joining me today is George Torres, who has River City Home Care, which is a non-medical home care provider business. And we have Sonny Espinoza, who knows a lot about long-term care insurance. I'll introduce him again in just a bit. But first, for the Financial Focus segment, Joseph Warren with Financial Planning HQ is going to help us with the Financial Focus question, and it's about risk management. Joseph and his family serve as financial CEO for successful people. Joseph, welcome to the show.
Really happy to be here again.
So what does risk management play in financial planning?
Yeah, I thought I would start with the story of my father, who started in the insurance business, similar to you, Sonny. And he told me a story when I was first starting about a husband and wife that he really had to chase. He really had to chase them down to get them to get life insurance. It's not something that people want to do. They get excited like, oh boy, we're going to get life insurance. And they kept giving bad excuses, and he kept having to give them calls. They wouldn't answer, leave messages, to the point where he said, I just want to give up. I don't want to deal with this anymore. And I remember he told me that to teach me a lesson when I was starting in the business. And he kept going. He just kept going and persevering and got them to get the life insurance. And ended up, what happened was that the husband ended up becoming terminally ill, passed away. And he told me he went to their funeral, as you know, agents often do. And when he was going to say his condolences, his wife just, said, thank you so much that you made us do that. And the point I want to make is these small decisions of whether or not to buy a long-term care policy, hybrid policy. They seem like they're not important. They seem like things you can just kick down the road, but they could be huge decisions that could be the difference between financial disaster and, your family being okay no matter what happens in your life. So
that's a really powerful story, Joseph, about how your father made a big impact for them, how perseverance in those small decisions, getting the right insurance literally saved that family from financial ruin.
Yeah.
So can you give us another example about a client who made a good decision with their financial planning?
Yep. This one's kind of an alley-oop. So my father was in the business longer than me. He started in 1987. And he sold these clients long-term care insurance. And I started working with them as a financial planner when I started in the business. They're actually the clients I've had the longest. And they kept, every year we would talk about the long-term care policy because they kept raising the premium, or they would say, we're going to cut the benefit in half. And he would get very mad. He would get angry about it. And it's understandable because it's like, what do I do? But we have a process for that. So we would just run it in their financial plan and we would see, do they really need the insurance, or could they cut it in half, or could they cut the benefit? And it ended up, each time it would show, they need the insurance. And again, these seem like small decisions, like what you do there, maybe trying to save, $40, $50 per month. But she ended up having a long-term care event, and now it's paying them $65,000 per year and making it so they don't have to draw down their assets, which could have really wrecked their retirement plan that we had built for them. So these small decisions of what you do with long-term care risk management can change people's lives. And it's important to talk to someone like George, talk to Sonny, talk to our team if you want to get good advice and make sure that you are making the best decisions with all aspects of your finances.
You know what that makes me think of? A stress test.
Yes.
Like when you go to the doctor and the doctor makes you run on the treadmill. I haven't had to do this yet, Sonny, but maybe someday. I'm still young and haven't had to do that, but I've heard about it.
Yeah.
And so you running those numbers every time the premiums went up or the benefit was cut to see if it still fit within the financial plan, that's really remarkable.
Yeah.
What are some other strategies people should know for long-term care planning?
There's a lot. We're going to get in depth with Sonny. I was talking to Sonny about the experience he has, and he can definitely go in detail. So I'm just going to go with broad strokes. For people who are younger, you could self-insure using an HSA plan. So sometimes people, if you have a high deductible health plan, you could max out your HSA and invest it and just keep a log each time you go to the doctor, each time you have a medical expense. And that allows you to use it like a long-term, like a medical emergency fund that actually grows and can be used tax-free. So that's one way if you're very early, like in your 20s, 30s. As you get older, long-term care insurance becomes more and more important. There's standalone insurance, which Sonny, y'all are going to talk about a lot, but it'll pay you a daily benefit. That's what I was talking about my clients having. And it's cheaper because it just covers the cost. But sometimes what people don't like about that is that it's use it or lose it. So if you don't have a long-term care event, which is a blessing, right? If you don't have that long-term care event, then you don't get any of that money back. So sometimes people like hybrid insurance policies, annuities with long-term care riders, even sometimes return of premium riders, which will refund you if you don't use the long-term care insurance. And those can be used to cover a long-term care event and then also pass money to your heirs if there's money left over after that, or if you don't have a long-term care event.
There's so many options, with all those different kinds of policies.
Yeah.
But it made me think of homeowners insurance. We pay our homeowners insurance and we pray that there's never a fire that burns our house down.
Yeah.
And so long-term care insurance is kind of the same thing.
Yeah.
You have the insurance, so you have peace of mind. If something does happen, then you're covered. Mm-hmm. Now, every week, Joseph, you usually have some resources for our listeners.
Yeah.
Do you have a resource this week?
I do. So this week, I have a long-term care planning guide, which I'll send to anyone who gives us a call and mentions Talk Law Radio. And the number to call is the 4s I say, but it's not. I hope I don't get sued. 210-444-2128. So if you call me at 210-444-2128, I'll send you that guide. And for the first 3 people who call, I'll also send you a book that will massively increase your chances of achieving your financial goals.
Awesome. Another guide. You're the guide of the group.
I'm creating guides and checklists, yep.
Yeah, thank you for doing that.
Of course.
That's 210-444-2128, 444-2128. Joseph, please help us remember what the mission of your company is and who you work with.
Yeah, we work with financially successful individuals, families, and business owners, and it's just about helping them to make the best financial decisions over and over so they achieve their financial goals. And we have a process for that. Part of that is risk management, so we'll have comprehensive safety reviews, look at every risk to their plan. But the main thing is we provide a lot of oversight and make sure that our clients make the best decisions so they get to where they want to go.
Great. Thank you for reminding us of that. So don't miss out. Grab those resources and start fortifying your financial plan today. Tell us again about the family part of your business.
Yep, I work with my father, Steve Warren, who was on the show last week, and my brother, Jacob Warren, who's going to be on the show in December. Not last week, last month. And my brother's going to be on the show in December. And it really is a blessing. I've learned a lot from my father. I was just talking about one of the stories he told. So, yeah,
right.
We're a family business.
I'm sure Jacob has some of those stories too.
Yeah.
So whether it's achieving or maintaining financial independence, becoming tax efficient, or building business wealth, Steve, Joseph, and Jacob create comprehensive, written, lifetime financial strategies that's uniquely yours, based entirely what's important to you. Joseph, we still have some time. Can you tell us about the roadmap?
Yeah, the roadmap experience is basically sitting down and talking about everything that's important to you. So we have a values conversation. Then we talk about what your goals are financially. We put a date on it, the exact dollar amount, how you'll feel when you achieve it. And that becomes the basis for getting you to where you want to go. So once we have those goals, we decide to work together. The strategy is built around that. We'll have tax experts, insurance experts that will make sure that you make the right decisions and that you protect everything as well with risk management and insurance.
Do you have anybody like me that would like to include my dog Lexi in my financial plan?
I haven't seen that yet. I think you're unique in that, but I know that's a huge part. I know that's a huge part of since I've known you, I know that, Lexi, the law dog, is a huge part. It's very important to you. So I've heard some things, and you're a lawyer, you know about this, where you put them in the will and trust and things like that.
Right.
Pet trust, right?
That's right.
I think I learned that from you.
So I created the Marquardt Revocable Pet Trust.
Yeah.
And I have a life insurance policy that's dedicated to that. And so if I become disabled, my trustee can access the cash value to pay for Lexi's care if I'm disabled.
Yep.
Or if I pass away, the death benefit on the life insurance can pay for her standard of living. She gets a bark box every month. That costs money. She has her vet bills, and she also has her beauty appointment every month.
Yeah.
So she doesn't like to be brushed, so we have to get her hair cut every month.
Awesome.
Also, if the money outlives both of us, then the remainder goes to create the Marquardt Chihuahua Farm. And most people don't know that because I don't have Chihuahuas now, but it all started with a Chihuahua. There was an old wives' tale that a Chihuahua would take your asthma. And I had asthma as a little toddler.
Wow.
I barely survived my childhood because of it. And so my mom got a Chihuahua, and sure enough, that Chihuahua had asthma. And I think I just grew out of it, but it created in me a heart for the Chihuahua breed. And at one time I had 5 Chihuahuas. And they've all gone to heaven. The old saying, all dogs go to heaven.
Yeah.
But thank you, Joseph, so much for joining us. Tell us again about the resource and your phone number and the book.
Yeah, we have a long-term care planning guide that we created, and we'll send that to anyone who calls 210-444-2128. And the book is designed to help you, whether you're a do-it-yourself or you want to have us facilitate a conversation, to really think about what your values are around money so you can make better decisions about your finances and about your money.
Great. Next, we're going to be talking to George Torres and Sonny Espinoza about what long-term care is and how to use it to pay for home care when you need it. Stay tuned. Are you confident about your financial future? What if you had a clear financial roadmap and a team holding you accountable to make the best financial decisions no matter what? At Financial Planning HQ, Steve and his sons, Joseph and Jacob, have been helping San Antonio families since 1987 with inspiring, intelligent financial strategies. Whether it's achieving or maintaining financial independence, becoming more tax efficient, or building business wealth, we create a comprehensive, written lifetime financial strategy that's uniquely yours, based entirely on what's important to you. Don't leave your financial future to chance. Call Financial Planning HQ today at 210-685-2722. That's 210-685-2722. And take the first step towards financial clarity. That's Financial Planning HQ, inspiring financial strategies for San Antonio. Remember, 210-685-2722. What if you couldn't speak for yourself? A power of attorney ensures someone you trust can act on your behalf. I'm attorney Todd Marquardt. Let's put your plan in place now. Schedule your free consultation at marquardtlawfirm.com or call 210-530-4278. That's 210-530-4278. Do it before you die. Welcome back to Talk Law Radio. Now we're going to be talking to George Torres and Sonny Espinoza about what long-term care insurance is and how to use it to pay for home care. George, welcome to the show.
Thank you, Todd. Good to see you.
Before we get started, will you say a prayer for us?
I'd be honored to. Dear Heavenly Father, we know where 2 or 3 are gathered in thy name. You're in the midst of us. We feel your presence, O Lord, and we are grateful for the gifts and talents in which you have blessed us with. May we utilize those to help with the listeners and all the general community that are out there, that we can inspire them, that we can help them. We can help them to prepare for the unexpected, but most importantly, to accept you as their Savior. And we ask all this in Jesus' name. Amen.
Amen. Thank you so much. So George is a one-time veteran of the show, and so we brought him back to talk about his experience about how to use long-term care insurance when you already have it to pay for home care. And I invited my friend Sonny Espinoza to join us. He's a full-time agent for New York Life Insurance Company, and he has 50 years of experience with helping people with their financial services. And he's also from New Mexico, so that's cool. Him and his wife were friends of my dad. And so when he got to San Antonio, he had to look me up and find out what I was doing. So thank you, Sonny, for that reintroduction years ago. Appreciate you joining me on the show with such short notice. Your background is so long. I'm not saying anything by that. I just don't know where to start. Well, so what would you like the listeners to know about your background?
Okay. Well, I've been with the company for going to be 50 years, December 1, and my career had started in Roswell, New Mexico, and my wife was a legislator there in Roswell, and so I established my business there with, grudgingly working hard and getting to know the right people, doing the right things for the right reasons. And it turned out to be a fantastic career. I've been I'm a life member of the $1 Million Roundtable. I'm also a life member of the councils for New York Life. Which means a lot. There's a whole lot of people that don't ever accomplish those kind of goals. Plus, I was on a national board. It's called NOLGA, and NOLGA is an organization that provides really coverage for individuals that lose their contracts because either a company has gone defunct, and or they're no longer able to continue the contracts in force. So that was for me, that was an enlightening experience because we took care of people in state of New Mexico, which was good, and likewise for every state that has a member on the board, they do the same thing. So it's been a great career for me. I'm still working, giving back a little bit what God's blessed me with, and here I am talking to you tonight.
Yeah, so it sounds like that you've been successful,
yes,
which means people trust you to give them advice about this type of issue, long-term care insurance. George, what's a good question to ask a guy with that much experience about long-term care insurance?
Well, Sonny, we help the listeners understand the simplicity, in a simple manner, I should say, what long-term care insurance is, to not be mistaken with so many other insurances that are out there.
Well, long-term care, the way that I explained it when we would get together with a client is, I would draw a bucket on a pad and say, okay, here's a bucket, and we're going to put a bunch of money in here, depending on what plan that we design for your needs. It could be $200,000. It could be $250,000 of cash that goes into the bucket. Now they can understand what the bucket and the money's all about. So you will have that available to you if and when the long-term care benefit initiates for your medical needs. And you can take it out at a very reasonable amount on a monthly basis, quarterly basis, or whenever you need it. Okay, so it's there. It's positively there. You can get a daily benefit from that, or any kind of benefit that arises as long as the contract is in force, not a problem on receiving the benefits, but it's nothing more than having cash available to prevent you from depleting any kind of your financial assets in the future.
And how would that be different from a savings account or a money market account or a CD?
Well, there's no. We're going to have that bucket of money available to you. I don't know that it's drawing really any interest on here, but it's guaranteed that you will have that amount available to you for whatever your medical needs may be or home health care needs may be.
So, George, how does that cross over into your world when you wish somebody had long-term care insurance?
Oh, absolutely. And that, again, that's the purpose of us being here today, to help create greater awareness within the community. Far too often, I do see families, and it's a little too late for them to get in. And we'll probably talk about when is too late. Mm-hmm. It's typically possibly somebody who has a medical event. You know, they've seen a loved one that has already developed some form of cognitive impairment, in addition to just aging out. If I'm not mistaken, I believe the max age is roughly 80 years old.
Yes.
There's with a lot of carriers.
Mm-hmm.
But and even now, there's not as many of the traditional long-term care insurance companies that are out there offering, let me rephrase that, traditional policies. There's more hybrids.
Right.
But to answer your question as to how does that relate to the benefits to our clients, I'm thrilled. My staff is thrilled whenever we do have somebody that we can help service with their long-term care insurance benefits, because it helps to preserve their savings and not dip into their nest egg until that point when they need to do that.
Sure.
We have a budget that we can work with, and it's very much streamlined, as you mentioned. It can be daily, it can be monthly, it can be quarterly, it can be, on an ongoing basis, and there's the multiplier that's there. So just simplistic math of that, if you have $100 a day, that's $700 a week, that's $3,100 a month, that's $36,500 a year. And that multiplier can also multiply out the number of years that are out there.
Right.
Some of the old traditional policies that are out there might even have an unlimited benefit. Mm-hmm. But one thing that I'll say that merits mentioning is there's a lot of the general community that calls us. Sometimes it's a little too late. So there's two things I want everybody to think of when it's a little too late. A little too late to purchase the insurance, mm-hmm. and a little too late to see the full benefit of the insurance, because sometimes they will trigger it when their family member has been admitted into hospice. Mm-hmm. And so now they have a short lifespan when they could have dipped into that way sooner.
Right.
And, George, I think that's so important that you're bringing that up, because I see people wanting to not use their insurance policy. They don't want to spend any money on care because they think it's going to deplete their savings, and so they don't get any care at all. Mm-hmm. And then that's when somebody falls down, breaks a hip, ends up in the nursing home. I think if maybe they got care sooner, somebody to be there to prevent them from falling down and doing their own housework and stuff like that, maybe they wouldn't have fallen in the first place. Have you seen that happen?
Absolutely. What ends up happening is we may have an introductory conversation with many families, and they'll inquire as to our services. They know that it's a benefit. They don't want to pull the trigger on spending any of their savings at this point, but unfortunately, there's a rude awakening that happens after a crisis moment, like mm-hmm. a fall, which could have been prevented if they had a little bit of help. But now they're being discharged from the hospital or facility, and concerned about their well-being. The hospital and the case management group or the social workers may mandate that in order to go home, they need 24-hour care.
Right.
So we could have gone with as little as 4 hours duration of a visit, just a few days a week, now to around-the-clock care, which is very expensive. And people are not aware of that.
Yeah. So, Sonny, some people get confused about whether they have long-term care insurance to begin with. I keep rubbing my chin because it's Movember, in addition to long-term care insurance month. So right. This is when I try and grow my mustache as big as I can, and I put wax on it to try and make it look nice. But I shave my chin hair, and I don't like that. And so now I'm trying to grow it back. We got to take a break, but after the break, Sonny, I want you to, if you can, talk about what the differences in insurance are so that people don't tell George, well, I thought I had long-term care insurance, and it turned out to be wrong. So this is Talk Law Radio. Stay tuned. Welcome to Talk Law Radio. I'm Todd Marquardt. We're back. We're talking about long-term care insurance, what it is, and how to use it. Sonny, I want to dispel some myths out there. Some people think they have long-term care insurance because they have Medicare. Mm-hmm. What can you say about that?
Well, under Medicare and Medicare Advantage plans, your benefit is you do have a benefit for some form of medical care for 100 days. Once that 100 days expires, then you no longer have any coverage. You've either got to have a long-term care contract to supplement the gap that you're going to have when those 100 days are gone. And a lot of people just think, well, I've got long-term care, everything will be fine. Well, if you go past that 100-day barrier, then you're in really bad shape.
And so will you, as a free service to the community, review a policy and let people know whether it's real or not?
Absolutely. That is something that is going to be part of giving back a little bit for educate people as to why it's so important to have that long-term care contract at least updated. You may not be able to qualify for maybe updates if you haven't done anything for a while. So it is insurance, so you do have to medically qualify for some of the benefits.
And they need to know about it, right, George? Like when it kicks in and when they are allowed to use it. So let's talk about that. But first, I want to let Joseph tell his case study.
Yeah, I was going to ask about that. Those activities of daily living, right, is the definition.
ADLs, mm-hmm. Yes, sir.
And I'll let y'all go into that definition. But I have a client I was talking about that actually had a long-term care event that was planned for ahead, and most of the costs, actually, I think the vast majority of the cost is covered by their long-term care policy, paying out like $175 a day. But the process for them, just in case anyone has to deal with that and they can't meet those 2 out of 6 activities of daily living, is for 90 days, that was the elimination period on the mm-hmm. policy. They had to make a record and keep a log and have receipts for all the expenses they were doing for having a nurse come to the house. And for 90 days, they had to do that because they had to make sure it was a real event. So the way, similar to disability insurance, if it doesn't last those 90 days and you get better, you recover, it's not going to pay out. And that mm-hmm. protects the insurance company. And you can choose that date as well. So it's customizable. 90 days, 180 days. Maybe if you have more of an emergency fund, you could, lower the premiums in that way. But after, logging all that for 90 days, which was, talking to them, it was stressful for them doing that because it's a totally new thing. Started paying them out.
I wanted to ask George about that because he's probably seen some people in stress. I've had some prospects come to me. They want to file a lawsuit because the long-term care insurance policy won't pay out. They say you're not eligible.
Yeah, and that's where it's important to give us a call because we can advise them with over almost 20 years of experience in doing this. Our staff is very well versed and can support and assist with that claims process. So just to initiate the claim, first of all, can be overwhelming for somebody. Yeah. Obviously, if they're dealing with certain ailments, it's in its own. And there's really 3 kind of buckets or categories that would trigger that, especially in some of the older policies. Mm-hmm. It can be the 2 of the ADLs. So let's go over those real quickly so everybody understands what those are. Yeah. That's hands-on or standby assistance with somebody who needs help with bathing, with dressing, feeding, toileting, ambulation, transferring, and incontinent care.
Yeah.
So given those, if somebody just needs to be even close by, most of the policies will, if you have two of those, will automatically approve you or be justifiable for the need for it to start to be looking at now for an extended period of time.
Yeah.
Given if somebody's got a short-term situation in recovery, and if they're not lasting at least within the elimination period or thereafter, then they may not qualify for it. But again, that's where we come in, and we're documenting the visits that we're doing and in conjunction with the expense associated with that. The other two triggers for the policy will end up being if somebody has a cognitive impairment. So if we have a mini mental state exam or a COGS examination or some of the other various cognitive examinations that are out there and documentation to support that, whether it's mild, moderate, or severe in nature, that substantiates a claim.
Yeah.
And then the third part with this is going to be more in the older policies is a letter of medical necessity. Mm-hmm. So if your clinician actually writes it to say, hey, for these particular reasons for safety, I'd like to submit a letter of medical necessity, and they sign it, and that can usually justify the need for that claim. But it's really important to know also that there's a variety of different contracts that are out there. There's a variety of different...
I'm glad you said that, George. That's perfect segment to what I was thinking. I wanted to ask you, Sonny, what are some of the factors that go into the cost of a policy? Because you can get a lot of different features and benefits on different policies.
Right.
Is there an affordable one for somebody out there?
Well, we sit down and we basically do a fact finder, and we basically ask them what they feel their needs would be as of today. We tell them what the average cost is on a per diem basis. In San Antonio, probably about $200 a day, which is I think is somewhat reasonable compared to some other cities. So we can crunch some numbers. I went ahead and crunch some numbers just so people would know what the basics would be. For a 65-year-old, a $200 a day benefit would be $241.92 for a male at 65. Along with his wife, at that point, she's 61. Her premium would be $294.42. So for those, both the husband and wife to be covered would be about $586 a month for a $200 a day benefit. Now that's $200 a day benefit whether it's in a nursing home or at home base. Okay. So they don't have to leave their home. Most people want to stay at home. And so we bring the benefit, we bring the people to their home. And by the way, we'll pay this benefit whether it's a relative, a friend, or a professional individual providing the service. Yeah. So that gives you the flexibility to keep the client in a good manner, a livable humor when this happens, because nobody wants to leave home. They want to be at home.
I like that, Sonny, because I've had some clients that said, well, my son or daughter will take care of me. Well, are they going to quit work to do that?
Yeah.
But if they can be paid from the long-term care insurance, that would be a positive. I have another type of client that doesn't want to be a burden. And so to have a paid caregiver like River City Home Care, that would benefit that type of client, the type of client that says, I want to keep my dignity. I don't want my children, giving me a bath. Have you met people like that, George?
Absolutely. Yeah. And I'll say that other client that lives afar, or the other relatives that no longer live here. So, and in addition to that, we talked about this, the sandwich generation. Those that are caught between caring for their parents and caring for their young children and caught in the middle. That's a dilemma there. There's a soccer game or going to take mom or dad to, an appointment, and your love for both of them is equal, but certainly you're just torn, and it creates a lot of stress and sometimes really that strife sometimes within a family between husband and wife. So there's a lot of challenges there, and that's where a benefit to having us come in and looking at those policies. So I think merits mentioning that there's probably not enough credit given to the efforts of many tenured long-term care insurance agents that have been out there knocking on doors, really kind of pushing families to consider this. There's a lot of standing policies that are out within the community, and I don't want people to have regrets to say, hey, we could have had an opportunity to explore this benefit and it's too late, because that's really the worst thing that ever ends up happening. Like I said, they're enrolled, they're going to hospice care, they start to want to utilize their policy, they've got an elimination period. The elimination periods can be anywhere from zero elimination, 15 days, 30 days, 45 days, 60 days, 180 days, 90 days. It's all over the place depending on the contract, depending on how much premium they wanted to pay into it. Mm-hmm. So let's just look at it. Let's just explore what benefits may be available, activate it, because the flip side of that might be there may be a waiver of premium. So if they actually start receiving, let's say hypothetically, this $200 per month per individual, do the math on that. They no longer have to pay the $500. Yep. Now they're receiving an excess of close to $6,000 in benefit, and they can utilize it towards their care because there's no place like home.
Sure.
Joseph, you do the financial roadmap.
Yeah.
And I know that you do retirement planning, but do you also ask your clients how they want to be taken care of if they're disabled or incapacitated?
That comes up later, not during the financial roadmap, but when we have that comprehensive safety review where we talk about every risk, everything that worries the client. But that will often come up, situations like that. And sometimes just in doing people's roadmaps, they'll mention, I don't want to be a burden. Sometimes that's very common. Something that I hear with the older generation is, I don't want to be a burden to my kids. I want to be able to take care of myself, be independent, things like that.
Another question I like to ask them, I don't do financial planning, but I want to ask them about the inheritance. Yeah. So I ask them, if you spent all your money on care and your children received no inheritance, would you be upset? Yeah. And, some people say, no, that's my money. I'm going to spend it on me if I want to. Yeah. But there's a lot of other people that say, I worked hard. I woke up early. I stayed late. I didn't go on vacation. I put all of my energy into my business or building a career. And yes, I would be upset if my kids didn't get anything. And so we'll talk about legacy after this break. Stay tuned. Are you 100% confident that no matter what happens in the financial markets, economy, or world events, you will achieve your financial goals? If not, we have a process to get your financial house in perfect order and keep it that way forever. Your financial future shouldn't be a guessing game. Planning, advice, organization, and accountability are deliverables you should expect. For over 35 years, Financial Planning HQ has been San Antonio's trusted partner for comprehensive written lifetime financial strategies. Steve and his team, including sons Joseph and Jacob, don't believe in a one-size-fits-all approach. Instead, they create a personalized financial roadmap for you based on what's important to you. As an independent registered investment advisor, they're not tied to any big corporation's products. They work for you, creating inspiring, intelligent financial strategies that put your interests first. Call Financial Planning HQ at 210-685-2722. That's 210-685-2722. What if you couldn't speak for yourself? A power of attorney ensures someone you trust can act on your behalf. I'm attorney Todd Marquardt. Let's put your plan in place now. Schedule your free consultation at marquardtlawfirm.com or call 210-530-4278. That's 210-530-4278. Do it before you die. Today's hidden legal issue blind spot is, what is long-term care insurance? Well, this is the legacy segment.
And now, it's time for the Talk Law Radio Legacy Spotlight. What's your legacy? Sponsored by Marquardt Law Firm.
Okay, Sonny, Marquardt Law Firm sponsors the show, and Attorneys at Marquardt Law Firm focus on business and estate law, including last wills, living trusts, and tax-protected inheritance plans. It's all about legacy.
That's right.
So we like to ask our guests. George has been through this, and so has Joseph, and so we're going to spring the question on you. What does legacy mean for you?
Okay, well, the impact it's made on me is I've had the privilege of helping families and business protect their matters with it. But most of all, provide them security and a legacy to leave with peace of mind that everything is taken care of when someone departs. My greatest impact, though, is to come from educating my community on the value of preparation and guiding them through the life's most challenging moments, and with compassion and some clarity as to what they need to do when it comes to a legacy. How do you want to be remembered? I'd like to be remembered as a servant, as a leader, someone who cared and made a difference to someone, someone who has called me a trusted advisor, someone who has put people first. And what matters most are the lives that I've touched and the families I've protected and the trust that I've earned from these people. And I just don't have clients. I've got really relationships with my people. My people still call me from New Mexico.
Awesome.
And sometimes on a monthly basis, asking me, "Hey, what do I do?" So they've got my phone number. They know how to get a hold of me. So to me, this is extremely important. And how will I pass something down to a special one of my beneficiaries? Yes, absolutely. I want my beneficiaries to understand that everything I've built in the business and in life was done with a purpose and love. Okay, the legacy I leave behind isn't just about wealth; it's about wisdom, faith, and family. Mm-hmm. So it's important. It's important that we all feel that way. And I think some of the things that I've been able to at least give back to my clients is that over the years I've seen my clients pass down more than just wealth. They pass down peace of mind, stability, and love for their family. It was done through the thoughtful planning, and it ensured that their grandchildren had a great education and furthered their lives for the future.
George, doesn't it say in Proverbs somewhere, I know you didn't expect this question, that a good man leaves an inheritance to his children's children?
Yes, sir.
Yeah, I like that verse because it means we've been a good steward of the resources we've been provided.
Mm-hmm. Absolutely.
Right?
Absolutely.
George, I wanted to ask you, do you have a case study or an experience where you could see the benefit really leveraged, versus the cost of the insurance product?
Yeah, absolutely. I've had numerous clients that we've sat with across the kitchen table. We're looking at exploring options of starting to initiate a claim, getting care going, sitting with the children and the recipient of care. We're going through very similar to a fact-finding process, our assessment. What are their needs? How can we help them? And that's when we determine, they need some help and support because they're concerned about falling. So standby assistance while they're showering and while they're changing and getting dressed. But the biggest thing here is that when you've got somebody who's looking at the big picture and then sees that bucket, right? So we look at now they're looking at utilizing the benefits of this policy. And I try to help them understand that let's put it in a perspective that over the course of this past, number of years, and sometimes we'll multiply that out, but let's say it's $100 because they bought this, 10, 20 years ago, and it's $100 for this $200 daily benefit. And we'll look at that and be like, okay, well, that was $1,200 a year, right? $100 a month, 12 months in a year. And they did this for 10 years to make the math simple. Mm-hmm. So, roughly they paid $12,000 into this policy. But now they're unlocking this benefit that of, let's just say it's $200 of a monthly benefit or a daily benefit, $6,000 a month. Roughly, we can have that exponentially grown, and it's this tremendous amount in benefit that is now going to be unlocked. All depending upon that multiplier too, right? Because that can be to where that's going to be for 2 years, 4 years, 5 years, 10 years, etc. So I've sat with many families over time, and I've looked at it, and I've literally applauded them for making that decision, because now they're not having to put their loved ones in a situation to where they're dependent upon them in different ways, or having even to deplete their savings. That is that generational transfer of legacy and wealth to their children and their children's children. Yeah. So I think we all aspire to do that, and that's why we're so passionate about this dream team that we have here today, to create greater awareness of everything that needs to be done to prepare for your future, for your long-term care incidences that people will not know until they get there, because it's such a just rude awakening for so many families that we sit with to think, oh, well, I thought Medicare was going to cover it. I thought these veterans benefits were going to cover it. I thought I had all my affairs in order. I thought that mom, now we've got to deal with this complex situation that we don't have a POA established. Right. So there's so much layers to that. But to answer your question, and it's just one thing to wrap it up, pennies on the dollar is really the benefit of what you can get in a long-term care insurance policy if you do it well in advance and have the right plan in place.
But you have to do it in advance, because if you've already developed Alzheimer's, you can't get it. Well, so there's probably some other medical conditions that are disqualifying too, right, Sonny?
Dementia,
so
dementia, which is pretty rampant at this point.
Are there other ways of paying for long-term care that you help your clients with?
Yes, there are some other options. If someone can't qualify for long-term care, there is a couple of other options. If you own some permanent whole life insurance, you can take the cash values from the whole life to pay for your home health care at that point. It just depends on how much you have in your cash value. The other option is to have an annuity, and an annuity will give you a fixed benefit for forever until you pass, and it gives you that benefit, and you can use that to pay for your home health care if needed. With our company, if you've got an annuity, by the way, and you've had it for 1 year, you can start taking the benefits out if you develop a long-term care sort of type situation, and we will not charge you for any surrender charges or taking the money out early because of the medical condition that you're experiencing. So those are good things that you can do to safeguard depleting any other assets that you may have, like your pension plan or your savings. So there are alternatives to paying for long-term care.
Great. And Joseph, you probably talk to your clients about this, how to make sure that you don't outlive your money.
Yeah, that's a huge part of it, yeah. Yep, there's a lot of different things on that. And actually, you kind of reminded me of the sandwich generation, sorry. Is I've had clients who they're having to care for their parents, and we help them to plan for that as well. So kind of like thinking, how can we use Medicaid? Because sometimes there isn't that plan in place. It was before we ever looked at their situation, because we're working with our clients. So, I mean, the alternative if you don't have long-term care is drawing down your assets and having to qualify for Medicaid. And to do that, you have to have very little in assets, like $2,500. Mm-hmm. You've seen that before, and an income that's also very low. So, that's a huge part of it, and it's making the good decisions well ahead of time, and that makes it so you're protected, you have your investments in order, and you're going to be able to weather whatever may happen, whether there is a long-term care event or not. You'll have that money, and if you want to pass money to your kids, you already have it set aside, and you know it's going to be there no matter what happens.
Well, I met with somebody one time, and she retired so that she could take care of her mom.
Wow. And
thank goodness she had a retirement, to take care of her financially so that she could do that. Mm-hmm. You probably meet with people like that say, well, I want to retire by such and such date. because I want to do these things. I haven't met many people that said, I want to retire so that I can take care of my mom. But she just fell into that circumstance, and thank goodness she had done some retirement planning.
Yeah, it's a big sacrifice. It's an important thing to do. So being able to, I guess you just kind of think about your money, your investments are there to make your life better, right? So you want to make sure that they'll be there for you no matter what happens. And you kind of have to think about these. They seem like negative things, but long-term care, you might die prematurely, you might become disabled. I think 70% of adults who reach age 65 have a long-term care event.
Sonny, I want to give you the last minute. What do you really want people to know?
Well, you've got to know that people don't plan to fail. They just fail to plan. And that's an old adage that was given to us by a pretty well-known New York life agent in Albuquerque. He was fantastic, and he said, if you don't tell people that every time that you sit down and visit with them, something's wrong, because that will never go away. That applies to people today, and I say that to them, and they go, "Oh well, we'll get around to doing that." And I basically ask them, do you have your wills in order? Something very simple, something very, preventative.
I say do it before you die.
That's right.
And we don't know when that's going to be.
It's too late after the fact. So, and I encourage them to get with someone, especially with you, and get this thing taken care of, because this is the only way people are going to have anything for the future.
Okay, that's it for Talk Law Radio. We'll talk to you later.